Hi, Daniel Major, CEO of GoviEx Uranium. We are an African-focused uranium company. Primary project is our Muntanga project in Zambia. Looking forward to getting our feasibility study out for that in the next few weeks. Previously, we were looking at 2 to 2.5 million pounds per annum over a couple of decades. It's looking like that still going forward. Very exciting news. Great time for the market, continues to get tighter. GoviEx timing is perfect with a 2027 production target, right where utilities are looking at needing material in their books.
Daniel, good to see you, sir.
Good to see you.
We're here at W&A.
Yes, and it's a very busy W&A.
Is it? Tell me more.
No, I was told there are over 700 people registered. And in fact, the W&A closed its bookings even before the conference started, which we've never seen before.
That's a lot of people. So it was just to help people understand. It's a World Nuclear Association Symposium.
Yeah.
Who uses words like that these days? But it's industry, basically. You've kind of got people within uranium, nuclear, you've got government, you've got utilities, the industry.
Everything in the whole trail from, except for the explorers, it's the production through to final use of the material.
Right.
All the way through.
Okay.
Conversion, fuel, everything.
Right. So industry's taking this seriously. They're taking where we're at in terms of the demand seriously and trying to ask the question of where the heck does it come from? There's a bit of a gap there.
Absolutely. And I think let's go through both of those facets of that one. I think the one thing that is very clear, and I've been to the fuel report ones, getting prepped up for their thing, just hearing what's coming through, and absolutely that. A lot of positivity on the demand side. A lot of talk. I mean, the industry in the past has always talked about, let's get ready, it's going to happen to us. It's now very much, it is happening to us, and we've all got to keep moving forward. And it's positive news from every corner of the globe on the demand side. And yes, certainly from the producer's point of view, it's guys, that's great, but we've all got to catch up as well, because there's a really big gap appearing in the future. And the stat I'd like to use is in the last W&A report, in 2040, existing mines will only produce 20% of primary production. The rest has got to come from new mines, or what they like to describe, unspecified. In other words, we haven't got a clue.
Not the unspecified.
But that is actually what was a lot of discussion on unspecified. You'd be surprised.
I saw the report from last year.
Yeah,
it's frightening. This will be worse. Let's go on the demand side of things. Just to break in for the audience who are new to this.
Yeah.
I want them to understand all the moving parts. So, there's existing reactor demand. There's new reactor build, future demand. There's reactor extensions demand, which is going to be there. We've got SMRs. We've got micro reactors. It's happening. Nuclear is what people view as a good baseload source of energy.
Absolutely. I mean, you had China about a week ago announce 11 new reactors again. The year before that, Russia announced 11 new reactors. Beginning of this year, there was 24 companies that targeted tripling nuclear generation out there. We're certainly seeing the SMRs getting greater and greater traction as different governments around the world are starting to tender for those and get them through. You've got governments like the UK government, the US government, the Canadian government now also pushing on the fuel for those SMRs. So the helium feed coming through as well. So it is across the whole portfolio and across every single continent.
Right. Demand's there. Politicians are behind it. We'll put that in the corner. Supply's the thing that worries me.
Absolutely right.
Not a lot of companies talking the game of getting into production. Those that are, I'm not sure all will, is a real issue. And I say that unspecified portion of this is it's kind of mystery at the moment because, I'll say the only thing that I'm certain about is they aren't getting funded. It's not a lot of money or the right amount of money allocated to that.
I mean, I think let's start right at the beginning of that whole process. And we have hardly seen any new mines since the last peak come through. We're just starting to see some of the easier ones and the restarts coming in. But at the same time, you've got the older mines coming to the ends of their lives. We've seen that in Niger previously with Orano's mines coming through to the end. If you look at Kazatomprom's forward forecasts, their ISR projects come on. You've got Cigar Lake as well. I mean, it's still got to go through phase 2, but its life is getting to the end as well. So, as I say, you're very quickly looking in 15, 17 years that instead of providing 75% of supply, it's only providing 20%. And we now have to fill all of those gaps. The other problem you've got is that as a result of the 2011 and the fall down in price, exploration budgets just collapsed as well. And so what you're seeing in the projects are mainly projects that we already knew about. There's no new projects suddenly turning up that we haven't known about for the last 10 years, that suddenly somebody's found the next big project. They're not. These are, like ourselves, are moving projects forward to get them into development, and we're not seeing that next tranche of exploration coming through to find things. And the money's not there in it.
Well, it kind of feels like the utilities are shooting themselves in the foot, right? Who am I to talk about their business model? Because I can't see their side of the chess board. But bashing the price down seems counterproductive, really, because it doesn't allow companies to be able to make the money to do the investment in the exploration, and that's not good. And it also gives a kind of slightly mysterious look to the marketplace for those people who may want to fund, exploration projects.
I mean,
right?
I think on that one, I mean, I wouldn't knock the utilities too much on that.
You can't, I can.
Well, you can, but if it, but the reality at the end of the day, the term contract market is where it's happening, and that's a negotiation between our side of the industry and the utility. So, those aren't knocked down. I think what you are seeing, though, for the utilities, and I had a bit of an insight from one trader who said what they've seen is the big producers have certainly changed the way that they're now talking, because they've got their book sorted out.
Right.
They're now going very much on a market price related contracts from now on, and they're moving their collars and floors up.
Right.
What you've also seen is a more pragmatic approach from a lot of the juniors who had RFP bids out there that were like, we're never going to get that, but we're going to put an RFP into bringing it back more to a hybrid structure, which is linking base-loaded contracts with market-linked. So but you're seeing those prices continually moving up. And we've seen it with the RFPs that we've been putting out. You move the price up and you're kind of right there where you need to be in the right place. So the term contract prices are moving up. But I think the one point I would make here as well is don't forget that most of the utilities are looking, they don't look incredibly far out. So they'll be looking at, 5 years out on. Most utilities are covered for the next 2 years. Pretty well. I mean, there's not much they need, which is one of the reasons why I think the spot market's not doing very much, because there's no need for them to be in that spot market. But what you are seeing is from 2027 onwards, yes, they know they need to fill the book.
Right.
And what is very clear in all our conversations ongoing is that utilities are desperately trying to find new sources of supply, because there is a big problem for them all that they can see the problem. So I think you will see that upward pressure in price coming through as new projects. And there are a number of utilities that try and support new projects. That's what they do. It's in their mandate.
Right. But there's no guarantees, because if they don't produce, there's no financial penalty to them. There's no risk money. Let's just put it like that. Want to be back. I'm trying to lay out the arena in which you're playing, and we're going to come to your project in a second. So the reason I'm critical of utilities, the kind of price plus model is great, but it's still not apparently seemingly at levels which will incentivize people to move into production. Certainly not enough people. That's all I've heard for the last 4 years.
Yeah.
We need to be incentivized to get back into production. I need my term contracts. I need whatever. But it doesn't seem to be at a level where the people who've been talking again about switching on are switching on.
But we would all like a higher price. I don't think that
so it's still a buyer's market, is what I'm saying.
Look, if you look at the projects, I'm not going to try and talk the uranium price down either here, but there has to be a pragmatic price, and you've got to get the first movers through this process. So, the better quality projects or the restarts don't need price. You don't forget, a lot of these projects that have started are actually restarts. They didn't have any capital investment to go in, so they didn't need the higher prices to bring volume on. And so those have come through. But you're right, as we go down this pipeline, we will now become very much driven by the cost of production all in. And that is the next stage that you're going to see this market go into. So you've gone past the easy picking ones, the easy restarts that needed to be there, and you're now going into the ASIC stage, which is, oh my goodness me, when I've had all this capital up and operating costs plus 40%, which is roughly what you need for a 20% IRR, yes, I need a higher price.
It's kind of interesting to me. If I'm one of those guys who's already got the sunk capital down, way back when, and I can make good margin now, I'm going to be slightly aggrieved and think, well, hang on a sec. I've got to go first to allow the next tranche for people to come in at a higher price to be able to make the same margins as me, admittedly, but I want some of that market too. So they're not going to rush in and say, well, I would rush. But I want enough to get going, but I don't want to commit everything.
But don't forget, if you own a mining project already, most mining projects in the uranium sector are 10 years at the most. So you actually need the cash flow for your next project anyway. So yes, you are coming in here and you want to generate the cash flow, and you will be looking for those better prices. And the other thing to remember, you're not contracting the whole of your project.
Right.
You're contracting the bit to get you going. And as you get going and that market gets tighter, you are then layering. And you don't just have one price basket. You will have different contracts over different time periods and different parties and different sizes and different structures. So you will have a layer of these things that you've built up over time, including some spot as well, that you go through. So what you're getting now and what you're going to get. And if you look in the past, don't forget that when the price has gone up, guys have tended to lose out because of the structure of the book they've got. But when the price is coming down, their book's up here and the price has dropped below. So they get a sort of more averaged out price structure in the middle of this thing.
Right. Okay. So those are some of the challenges ahead for all companies, and that's the kind of condition of the market now.
Yeah.
Maybe we'll come back to it later, but let's get into you. Okay. I'm not seeing you for a while. Obviously, rather tumultuous year in Niger, stuff out of your control. That's mining. I get it. What can you tell us in terms of how you're dealing with that? And then I want to get into stuff that you're in control with. So if we can just get that off the table.
Yeah, no, absolutely. I mean, it was totally out of our control. I mean, we were doing everything that we could do in the country. We were moving forward on our project. We were communicating to the government all the time. But at the end of the day, as we put in our press release, we felt that the government acted unlawfully in its actions in revoking our license. We have already written straight away to the government and said, look, we're now in dispute with you. Under our agreement, we agreed a period of potential negotiation. We said, look, if you want to negotiate, then talk to us. But we said that if you don't, then we will have to look at our alternatives, which obviously include legal action to recover our lost value that was in that property. So we're in that stage at the moment. We've been looking at that salute. We've been obviously examining our legal position to make sure that we're covered and we fully understand where we are, and we're looking at the alternatives to that forward. So we're getting close to making that final decision, and we will be seeking recompense.
Right. Okay. So for them, was it a question? It's difficult, right? When 2011 happens and the market goes into some downward spiral and nothing's happening in the space, it's not easy to raise money to advance project and all the rest of it, right? So timing probably wasn't on your side. But likewise, was that the concern of the government? Like they couldn't see enough happening for them to feel that this project was moving forward at the pace they wanted. Well, if you had to step in their shoes, how do you read the situation?
No, I mean, we had a very constructive relationship with the government prior to July. Very constructive. I mean, they fully understood that the project took time.
Right.
You remember we did a feasibility study at $65. We only saw $65 in October.
Yeah.
As you appreciate, mining projects take time. Yeah. You don't just appear out of nowhere. And we were working on the debt market. We had announced that we had potentially $200 million of debt financing for this project, and that takes time, as you know. I mean, you don't need all the due diligence and stuff, and and the change that we had gone through in the country just meant that process was taking longer. So we had sought to at least alleviate some of that and move forward. But at the end of the day, they decided that they were going to revoke the license. And, the point I would make is it takes a long time to get a mining project going. And for them now, if we're not building it, it's going to take years to get anywhere back to where it is. So, from our point of view, it was their mistake.
Yeah.
We were in a good position to keep moving forward, but it would take time.
Yeah.
We don't agree with their decision.
It's a difficult one. I think when there's like African coups, there usually on a regular basis. It's difficult for the outside markets to understand. Usually it's like a transition of government is the way I phrase
normally
it.
it is.
Normally, right. But this is obviously a little bit more, when the military's involved, it's a little bit more precarious as well. And throwing the French out doesn't help. And maybe arguing with the US doesn't help. And so I get it. Look, and I appreciate there's not much you can say if you're going through a legal process. I'm not going to push you on that one. But we're going to have to park up the value of that for now to one side, because you may or may not get some value for that soon. You've got to focus on what you can control. So let's talk about that.
Yep.
You talked about £2.5 million. That's a pretty big number. Where are you? How you talking about feasibility study, etc.
Yeah,
so let's talk.
Yeah, so I mean, back in 2017, we acquired Muntanga because we wanted to see diversification in our
I think I gave you
portfolio.
some stick for that.
Yeah,
Going,
probably.
hang on.
Yeah. Why would you do that?
Why would you do that? That's just insane. But here we are.
Yeah, now it looks like a good
Genius.
idea. Genius.
Right.
Genius idea.
Yeah.
So Zambia is a completely different story for us. I mean, we're in a mining jurisdiction, very clearly so. Zambia is trying to triple its copper production. It's looking at expansion into critical minerals like lithium, etc. It's pushing its gold industry forward as well, spending a lot of money on infrastructure, rail links. It was pushing out in power. We've got a drought at the moment, but that's a temporary issue to deal with. It's improving its education as well, building a lot of schools. So these are all things that help the mining industry get forward. So for us, it's great. We have spent last 2 years was drilling out an inferred resource and putting it into an indicated resource so we could use it in the feasibility study. We just spent the last year doing all things that needed for a feasibility study. And, that's, in our case, we do everything, including all the geotechnical. I see in some companies that they will then do geotech later. I'm like, no, we do it all from one go. So we can go straight through into the construction phase, detailed design and into construction, subject to financing. So the nice things about that project are, one, it is sizable. I think we've currently got £44 million sitting there, all within a $70 pit resource, and we're going to probably use $80 because that's where the market is. So we're more than covered on what's there to be mined to come through. It's a sandstone hosted, which is really helpful. And more importantly, it's got very little slime in it. So basically, you're just looking at sand with nothing in. So which means, the important thing about that is that solutions then just flow. So it's really just a big sponge, what I'm describing to you. So that's really positive because actually we don't need to mill the rock. We just crush it down to an inch, whereas that's a lot of power that you would have to normally use, which we don't have to use. That permeability is really important because it means the acid flows through the rock really fast when we want to process it. So we get a very quick recovery on our material. And the very good thing that for us is Zambia produces sulfuric acid as a byproduct from the copper industry, the copper smelting. And as you can appreciate, sulfuric acid has been something of a headline topical item, but it's an issue, and I think that's going to become an increasing issue across the industry because a lot of sulfur comes out of the oil industry, and you are competing against the fertilizer industry the whole time, and the fertilizer industry, the agro industry, as you can appreciate, is a downside bigger than the uranium market. Yeah. And so that competition for sulfuric acid is going to be an ongoing situation that has to be handled.
Okay, so out of the ashes, as it were, it seems, so you've got yourself something which is actually quite substantive, quite advanced, actually, from what I'm hearing from you.
Very.
Into timing-wise, not bad timing at all. I'm interested in what you told me about what the moving parts are. What do you think is going to be what do you think the market will react to is what I'm getting at. You know, for explorers, it's like make a discovery. For someone who's talking about doing a feasibility study.
The numbers out of the FS.
Right. And it's due when?
Next couple of months.
Okay.
Literally are those last stages now where you're putting the operating numbers together. And
so realistic costs, yeah, they should be up to date, right?
oh, well, they'll be right up to date.
Right
I mean, they'll be now.
Right, okay. So we've got to then have maybe a realistic view of margin, which most
Correct.
businesses kind of neglect to mention. And at a scale you assume from previous data that's going to be interesting to the marketplace as well. Certainly the annual production numbers.
Yes, 2 to 2.5 is a great number. And the nice thing for us as well is that we're getting a lot of demand for conversation here. People want to talk about them. You know, there is this one word that keeps coming up in this industry as well as bifurcation.
Yeah.
It is a big issue, which is where does material go to and who's now competing and where material can't go to.
Yep.
And therefore, somewhere like Zambia particularly is in a great position because our export point happens to be Walvis Bay. So we can go straight to Namibia, same port that our friends from CNSC and CGN operate, but also it's a great port just to export straight up into Western Hemisphere as well.
Right.
So we can actually go in either direction from a material point of view. You know, we've had really good general feedback from the lending community as well, which is, guys, when your feasibility study's ready, show it to us because we would really like to have a look at it.
Well, that's interesting. And we can give the simplicity, I think, of the host rock, etc., sandstone, I should say, is in terms of the network and recoveries and all of that stuff, that's going to be in the feasibility study.
All of it.
Right, all of that, right? So you're going to know how the kind of capital structure, or a bloody good view of the capital structure required to kind of extract that. Does that mean you can sort of accelerate through a bankable feasibility?
Well, this is the bankable.
This is the bankable.
This I don't do anything but.
You're done.
Done and dusted.
Wow. Okay. Just got better. Okay.
Yeah. So the way we do this is literally take it straight to bankable. So absolute detail of everything we need. So, you know, I've seen other companies who kind of do it, and then they start doing geotech drilling on things.
Yeah.
You're like, why? That you can't be bankable if you're now doing geotech.
Yeah.
So we've done sterilizer drilling on everything, so we know what we can't go on to. We've done all the geotech for all of the construction areas that need to be done. We've done all of the water drilling and pump testing for all of the water we need to come out. We've redone all the metallurgical test work that was done in the past and modified it to improve it where we need to improve it. So all of those changes, we go through all the logistics about how we're going to bring things in. So we literally just go onto a straightforward feed, but the feed is just taking that FS and going, all right, you wanted that truck blue? Well, shall we paint it yellow because it's cheaper? You know,
Can I frame it out?
As soon as we can, early into next year. So I'm going to go straight back out to the debt market with this as soon as I've got it. You know, Idabra's in February, so it's a great time to be liaising with all of those guys as well. We will then try and structure out that whole financing option that sits on that. And let's give ourselves 12 months.
Okay.
Then late next year, that would be my FID point then, and 2027 would when I would like to put the project into production. Physically generated.
Quick.
Well, there's no reason why not to. It's not a complex project.
Yeah, well, yeah, that's interesting. That's really fascinating. That's better than I thought.
Yeah.
That's better than I thought. Okay, so that obviously money, right? There's the thing. I think massive disconnect between equities and what we talked at the beginning. Industry is thinking and appreciating in terms of if we are to produce into 2030, 2040, 2050, 2060, we need way more discoveries, way more mines, way more production than we see today, right? So timing-wise, it feels like that could be quite handy.
As I said
this
earlier,
project.
2027 is where a lot of utilities have got space in their book.
Yeah.
And are starting to say, you know, how am I going to fill this space? So we're coming in at almost exactly the right time for those utilities.
So your message to investors, whether it be retail or other, and whoever you're meeting this week, is we've got scale, we're going to demonstrate and talk to you about the margin capabilities in the next 2-3 months. Jurisdiction, a whole bunch better than that we've been dealing with, so that we don't expect issues there. Route to market, literally, I'm talking infrastructure, route to market is there for us, and a whole bunch of leverage from where we are today in terms of value. So I said the market has discounted any value attributed to Niger until you sort out that, wherever you get to. How do you value this project?
In my view, we got more than discounted for what was going on in Niger.
Yeah,
by a long shot. I mean, there is we're not valuing in Zambia at all. Before,
doesn't feel
even before this all went wrong, and where we saw the price falling, at that point, I still felt you were getting Niger for free. In this conversation, and where we are now, no, there's a lot of upside, and as I say, it's. Yeah.
Do you particularly manage? Sorry, I mean, it was a blunt conversation with you. Do you feel that the market is blaming management for Niger when unjustly, and therefore doubting your ability to deliver this project?
Well, if they're not telling me that,
right?
Because we talked to the big shareholders out there, and you made a comment at the very beginning. It was out of your control.
Yeah.
And this was a geopolitical. Well, absolutely, it was geopolitical. We've seen. Irano in the same position that we are. You've seen others in the same position that we are in places like Burkina Faso. Well, I was going to go to keep in my region.
It's everywhere.
No, we're not.
It's everywhere.
Burkina Faso and Mali, where people have had their projects, taken away by the government that they're in for no logical reason and inappropriately. And so, we did everything that we could. Within our ability, and certainly talking to the larger shareholders, then no, it's like, guys, you were dealt the hard cards here on this one, but there's a recognition that even earlier on in this, it was like, guys, just focus on Zambia, just get it there.
Okay, so let's cut to the chase here with Zambia, which is. Next couple of months, we're going to look at the numbers around the FS, and we'll go, we like that, don't like that. Assuming what you're telling me, they should like it. They should like it. We're going to need some money to get through the feed and then to an FID. You'll be having conversations like you are this week with on the debt side, and then you're going to work out what happens on the equity side.
Correct.
Whether at project level or whether at pubco level, I should say. Right. Choice is yours.
Yeah.
Right. You do the best thing for shareholders. You're going to need some money to kind of get through that phase, presumably, and you'll be looking to talk to market about something like an equity raise or.
Well, let's see what happens to the share price after the FS comes out. I mean, that's the timing. The FS has to come out first. It would be inappropriate to do anything without that because, we're not showing our best foot forward.
Yep.
I need to show what it can do.
So you're fine till then?
Yeah, I'm more than.
Right, okay.
So we're good. We're good for a while, and we want to get that FS out, get it out there. I mean, my uranium sales guy is already champing at the bit because they can keep saying, can you please send us the FS? And we'll get straight into that process. There we will run straight down to the lending banks to say, what are you offering? And we will look at the other alternatives that go to finance a mining project. So, no, it's going to be the silver lining of everything that happened this year is that, we've always felt that Zambia was never getting the headlights.
I'm so glad I told you to do that as well as Zambia. That's good. But genuinely, it was kind of surprised me. This conversation is so easy to kind of just go, having sort of been wrapped around the back of the head by the whole everything in Niger. It's so easy to go, oh my goodness, just fall over and give up. But you're getting after this quickly, and creating value. It feels like creating value. Right? People have to take a view on that when they listen to this.
We'll see where it comes down. Okay. I'll know, but I know as well.
Yeah, but there's also I think that the scale of what you're potentially going to be able to create here in relation to a lot of all the other stories out there. There's a lot of £500,000 stories coming out of North America, which this is 5 times bigger than that.
Correct.
And the margins you'll demonstrate, but presumably you'll be hopefully aiming to get prices and contracts and
exactly.
Have you got the team in place to do that in terms of like kind of one, the negotiations around the kind of debt component and the funding component, and then maybe start conversations, or as you probably are this week, around term contracts, etc. Have you got a sense of
the contracts? Not. I mean, the contracts will wait until the contracts are no different to the equity side. They want to see the feasibility study.
Sure.
So
but at that point,
at that point, yeah, absolutely.
You got the team.
The team, put this way, I'm starting to sort of pick the people that I need to go into here. I do not need it all yet.
Right.
It's not required. There are some, teams you can build, and even the operational side, there's a lot of contract stuff to go through at the beginning. So as long as you pick the right contractors as well to take you and deal with that. I fortunately do have a technical background as well as a financial background. So, but I have people already I've got lined up. You just don't want to be spending the money until you need to spend it. But there are guys waiting in the fields to come in and join us. And I've got a good team in Zambia already. I mean, we appointed an ex-mining engineer come in as our country manager down there, who's turning out to be an absolute star as well. So, yeah.
Okay. And in terms of how you play this market, obviously there's a lot of moving parts there. Equities have taken a beating here. Prices are settled in at low 80s at the moment. We've seen the announcement from Kazatomprom about their production levels, and everything's pretty much heading east. Bifurcated market in terms of where these molecules are moving. But do you think there'll be bifurcation in terms of pricing? Do you think the West is going to pay more because it's so hard to come by?
No, I don't think so. I think you will always have a market, because don't forget, at the end of the day, you are also starting to see material coming back the other way in here. So people like CNNC are now selling out EUP, and it's coming back into the Western market. So material is going around, but I think it's that access to, the underlying underpin in this whole thing is the primary material. Yeah, you need to find U308 from somewhere. You can sell EU supply, but you can't do it without U308. And it's where does that, and that's where that bifurcation problem is starting to come up, in my view, is that, places like with the safeguarding issues, you've got that strong growth, as already said, Russia, China driving themselves forward. Kazatomprom has already kind of capped out where they're going to be producing. They've already told us that they're going to slow down. Well, they'll slow down. They can't make what they said they were going to do next year. Expect that. I think that number is going to be kind of where you're going to see them at the sort of 65 number all the way across. But with China's strong growth market out there, they need even more than that to keep filling up the scenario. The US market is obviously massive from a demand point of view. Well, the US suppliers are unlikely to fill all of that, and the Canadian market is kind of filling up a gap that's around there. So I think it's a great opportunity for Africa to be in that game, saying, well, do you guys over here who really need this stuff, because you don't really believe in Kazakh material coming, and you can't anyway because the US government is stopping you doing Russian material, etc. We're right there in the middle. At the same time, you've got people like the Chinese buyers who say, well, I can't buy from Australia and I can't buy from Canada because of safeguarding issues, but I can get it from Africa. So I think we are in that really nice place to be.
Bifurcated market in terms of, and we've seen this with other metals, where certainly in the critical mineral side of things, where you say, right, if you're going to sell your product to China, we are not going to fund you. The US saying, right, we will not be funding you. We will not encourage anyone to fund you as well, which is the real threat here in all of this. So you've got optionality in terms of where you sell it, but you would have to have the full finance suite in place when you make that choice.
Yep.
So,
but I think there's enough people at the shopping table that
there's some competitive tension there.
Yeah, absolutely.
Well, Daniel, I'm pleasantly surprised and delighted.
Why would you be pleasantly surprised?
Well, I just think because it's out of a difficult position. It's always kind of easy to kind of get sucked into the misery that is, a coup ruining what is a perfectly good project, right?
It was a very good project, and it was going and it was advanced, and we always had Zambia sitting up, lined up behind. Yeah. That delay of what happened and being forced into the position, we just kept going on with Zambia and said, well, look, if this doesn't work out successfully, we will get Zambia done anyway. If it's successful and we are, it all works out, well, then we've just got a more difficult problem to deal with. Yeah. We try to build two things at the same time. But you can't, in this industry, just go back and go, woe is me. You just say, I got a problem.
Yeah.
I mean, we're engineers at the end of the day. You know,
Problem solvers.
find a solution to your problem. And
Okay.
our problem was get going.
To answer your question, why would I be pleasantly surprised? I'm pleasantly surprised because I don't think the market's valuing you fairly. So I think there's an opportunity. That's what I'm pleasantly surprised.
Well, that I appreciate.
Okay.
Thank you.
Stay in touch.
We will.